This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe. Welcome back to Invest Like a Pro. So today I want to give you a little bit of a glimpse into how to use MACD and ADX together, but a little bit differently than what I've explained before. I'm going to show you a specific pattern that develops on a higher time frame using the MACD, and then what I want to see as a complement on the lower time frame in ADX. Using this strategy, I think it gives you a little bit more confidence in some of the things that I've been teaching with respect to zero line reversals and how and when to take a trend line break. So let's go ahead and get into this. I've got a couple of different examples. I'm starting with Southern Copper, and I've got a weekly chart on the left and a daily chart on the right. And so what I'm looking at is the combination that I'm looking for is I want a pinch play on the higher time frame. That's my starting point. I want to have a pinch develop. And if you see how this plays out here, actually the stock breaks out of this basing area. Now, sometimes a pinch develops inside the range, kind of like this. And that actually does qualify as a pinch play there, right as this MACD is crossing above the zero line. But I want to look at this one here. Most of the time, the strategy that I'm going to discuss today, you will see a pinch that actually develops. If you notice here, it does qualify as a pinch, but you can't really see it in the MACD line. It doesn't really look like it's coming in towards the signal line. But the ones that do, that come in towards that signal line, we can use the strategy I'm going to talk about today. So we've got this breakout pattern, and then we get a pinch back towards, we get a pinch play develop as the price is pulling back towards the breakout level. So that's kind of my starting point. Yes, I like to see the ADX. Is it have to take place? Not necessarily. Sometimes this could be coming out of a low ADX condition. As long as we see green DI improving on a breakout move to the upside, then I'm okay with this. But if you have ADX showing strength like that, all the better. So I know that's my starting point. Now, on the lower time frame, what I'm looking for is a low ADX condition. And we can see that once this stock, so there's a couple things that have to take place. The stock makes a move to the downside and then makes a lower high and then makes a lower low. Once we have that, an ABC decline, we can draw a trend line in place. And I've said that in the past that you can do that when you have a zero line reversal. But notice what happened here. You see how we have overrun on the MACD signal? It breaks through the zero line, and both lines actually break below. But what I'm telling you is that if I have low ADX and I have a pinch play develop on the higher time frame, then I can take the trend line break. Okay, so I'm trying to give you a combination, and if I'm looking at patterns, I'd be saying higher time frame, pinch, lower time frame, low ADX. So I'm not really worried about overrun in the MACD in this instance, but there are some criteria that have to take place. Number one, we have to have low ADX, and I would prefer it if all three lines are below, but this is okay if red pokes up. As long as the ADX line stays up below 25, then I'm definitely okay with taking the trend line break, even if there's overrun. Okay, we've got overrun. Normally, I would look for some kind of a double bottom or some kind of a test. But in this case, because there's a pinch on the a pinch play developing on the higher time frame, I'm willing to take the trend line break on any of these bars here as this is crossing up through the downtrend. And now, if you notice what happened, in this case, we actually got a higher pivot low and an entry off of a pinch on this time frame, which would have qualified as a 2 time frame pinch play with this move coming back up through around $48. But I would tell you that sometimes when you have a low ADX pattern, you're only going to get one chance. And if you have the pinch on the higher time frame and you have low ADX on the lower time frame, draw a trend line on price. And we definitely want a trend line where you've got a lower high and a lower low. Sometimes it'll be a horizontal trend line, and you might not have that higher, lower high and lower low, and that's okay. As long as it's a horizontal trend line, I'm willing to do that as well. So I hope this makes sense, but let's go ahead and look at another example. So let me bring this up to date. If we look at VIVE off this high, so we had a move to the downside and then a rally up to the 18 MA, and notice the bearish pinch that developed with room to the zero line. Okay, I don't like this pattern when it's right at the zero line, but in this case, we had some room before hitting the zero line. So we have the pinch play. Now notice what happened on the lower time frame. We got a low ADX pattern to develop, and so as that's happening, as this is dropping down, we're looking for a period where, look at how this made a low here, rallied up, and then came down and made another low and then rallied up. So I can draw a horizontal trend line like this. I know I have extreme low ADX at this point, right before the breakdown to the downside. Now, again, we get a cross of the MACD, and then we get another pinch play. So this is the 2 time frame pinch play to the downside, because first we get it here, and then we get it here on the lower time frame. But I'm showing you an earlier entry strategy when you get a low ADX pattern, preferably an extreme low. And yeah, this is a little bit more, this is a little different because we don't have a trend line to the upside. It's more of a horizontal play. But I do want to give you a couple of different explanations of how this could play out. Let's use one more example. Now we've got another downside bearish pinch. Look at how this took place. You see how this happened where it crossed down below the zero line and then pinched up. We had strong ADX. And let's just circle the price area where this is developing. Now, look at what happened on the lower time frame. Again, we got overrun in the MACD, but look at this extreme low ADX. Now, one of the things I want to explain with trend lines is it's tough to draw a trend line like this, right? I mean, when it's so steep, and notice how you want to make sure the trend line, when the price is breaking the trend line, that the slope of the 18 is pretty close. So I would probably be using a trend line more like this instead of using it off the low. I'd probably be going for something more along these lines. You can do it either way. I mean, you could draw a trend line. Once that breaks, you'd put up a new trend line. You can do it like that if you want a slightly earlier entry pattern. But a lot of times what I do when I see it's so steep, I end up using the higher bottom as the starting point, and then this is the anchor, and then we drive through, draw through there, and the break of that trend line with low ADX is a trigger. I don't have to wait for a test of the high. So it looking at a 1, 2, 3 sequence. I'm taking the 1 in this instance when I have a pinch developed, especially if it's near the 18 MA on the higher time frame. So if I have strong ADX, I get a pinch, and I know I'm fairly close to that 18, then I'm willing to draw a trend line on price when I get low ADX on the lower time frame. So I hope this makes sense, but it's sort of like I'm giving you a little bit more detail into how I would go about trading, and it's another way of triggering into the play. When I have a low ADX, I can take advantage of that. I can draw a trend line on price, and I can take advantage of the trend line break as an entry pattern. Go ahead and post any questions or comments, and we'll see you next time.